and thank you for joining us as we take a look into the precious metal market with leading industry insiders. Joining us today, we have cryptocurrency veterans Gary Rowe of Jade Research and Attestant Limited, alongside Jim Burton of Digital IM, discussing how the shortfalls of physical gold investing are being navigated in an online space. So obviously, as we've explained, we've got members of our audience and demographic that may not be familiar with all of the intricacies of cryptocurrencies and blockchains and that kind of world. Could you please just do us a quick introduction of kind of who you guys are, what you do, and any exciting recent developments that have gone on within that industry?
Go on, Gary, you start.
Okay, well, thank you. My name's Gary Rowe. I'm the CEO of Jade Research. I'm also COO of Attestant Limited. I've been a software developer for over 30 years, and I've been in the cryptocurrency, crypto asset space since 2011. And so I collaborated with Jim on a project called Multibit, which is a wallet which is for storing Bitcoin, which we ran for about 5 years or so, saw about 2 million downloads, and then sold it on to another company called KeepKey. And since then, we've been offering consultancy services to various financial institutions throughout the UK. So I'll hand over to Jim, and he can explain what he's been up to.
Oh, yeah, so I've known Gary for years. We've worked together for years and had the company together. And so after the Multibit years, we had a year in HSBC in Canary Wharf in their blockchain team, which is really good fun. It was really interesting. It's fascinating to sort of be on the other side. You know? So then after that, there was a startup. And then now Gary is in Attestant. He spends more time on that, which he'll talk about a bit later. And last year, I had the good fortune to be working on the Isle of Man in Douglas. The government there has a digital agency. They have a blockchain office, which is kind of like selling and marketing the whole island to people to bring blockchain companies on island. So I was a technical lead in that group. That was pretty interesting. That was more sales and marketing, so that was quite a change from the technical aspect, you know. So that's basically what we've been doing. We always go to the conferences. I'm based in London, so pre-COVID, I would always go to the conferences and meetups and stuff like that. So we've been living crypto for years.
Yep, fantastic. I mean, I don't want to jump ahead, but you kind of gave us a precursor there for kind of the larger institutions and these governmental bodies. They are investigating blockchain, so it's nothing to be ignored, you know. And it was an interesting point about the conventions about the cryptocurrencies, because of course they can no longer happen with crypto and COVID even, and you know the exposure that they would have benefited from that, you know, it's of course taken a hit. But you know, I don't want to jump ahead. That is on later.
That comes later.
But obviously we have a market for ourselves for shards that is of course mainly focused on physical assets, and you know I like to think that cryptocurrencies share a lot of those same characteristics as physical gold or silver or whatever precious metal you're into. You know, the highly liquidable, you know, there's a finite amount, they're decentralized, and they've got a global price. Like the physical metal market, they are being used as safe haven instruments, and you know, since COVID, you know, everyone's been in a rush to kind of retain their wealth, and we've seen a massive surge. It's been widely reported on a demand for gold and other precious metals. Have you guys seen that in the cryptocurrency market?
Well, yes, I think is the quick answer there. We've seen there's a lot of volatility in the price, but it's usually reflected in the top two cryptocurrencies, Bitcoin and Ethereum. Bitcoin occupies the big headline space, mainly because it got there first and is the headline, whereas Ethereum is seen as kind of like the up and coming, possibly the usurper. And in both of those environments, what we see is a supply shock, because people are wanting to get hold of it and they can't get hold of it, and so that drives the price up. And you know, this is there's been volatility because you know it is a difficult asset to price, but on the whole, we're seeing significant increases. Now, obviously, I can't give financial advice, right? But you know, so I don't so I misinterpret this. But it is a very interesting space.
There is another indicator for how active, in that you've got all the networks have a certain capacity, like a motorway. You can get a certain number of cars down it before it gets congested, and all the big networks are congested. Like I had a look this morning on the Ethereum network, that there's typically 100,000 transactions that are like waiting to get finalized. So that's like the queue on the motorway is typically this morning it was 100,000, and I know it's been like that for weeks, if not months. So that's a pretty good indication that the levels of activity are pretty high. We'll come on to that a little bit later on when we talk about what is going to happen in the future, I think. But yeah, there's another aspect in the crypto world. There's this phrase called crypto winter, which is basically there was a big run up until about the end of 2017, and then since the beginning of 2018 to the end of 2018, you can see if you pull up the Bitcoin price, the price has been dropping and dropping, and it's pretty similar to gold. What was it from about the peak from 1900 down? From, was that 13 or 14 down last couple of years? So it's a different time period, but basically in that winter, interest tapers off, and I would say that pretty much finished at the end of 2018, and since then, if you look at the Bitcoin price, it's been pretty range bound, goes up and down. The volatility in crypto is much higher than gold and silver. So if you're used to the gold and silver market, the price variation is quite shocking. It's just the nature of the asset. But if you look at Bitcoin from the beginning of 2019 onwards, it's been range bound between about like 5,000, 10,000, 15,000. So that's a big range, but it seems to just be going up and down, up and down. You know, those are all historic figures. Who knows what's going to happen in the future? But
no, of course, you know, this demand that we're seeing across both industries is to be expected in economic downturns such as this. And I find particularly interesting is, you know, again, because these precious metals are a physical asset, they have to be processed, mined, stored, sailed, and, you know, you sold, you've got delivery as well. And all of that requires manpower, time, and other commitments. Of course, when you've got a digital asset, you could argue that some of those processes or well, they are eliminated, or they're taken on through a different method. When we see COVID take on and kind of wipe out so many industries temporarily, and then the demand skyrockets, of course, those existing supply chains and logistical routes will be under massive stress. When you have a digital asset, does the same apply? Would they strictly be under a strain?
It depends on which crypto asset that you're working with. So, for example, the most common one we know of is Bitcoin, and that has a very strict supply approach, where every 10 minutes new Bitcoins are presented to the system, and that doesn't vary. Other than through a process called halving, which is part of the economic supply model, the monetary policy behind it. Different crypto assets have different rules. So, for example, Ethereum is different, but there are other ones which also have different rules as well. So, in one sense, they are not constrained by the physical challenges that would be approached by, say, mining for gold, because what would happen is you could, as a software programmer, in theory, just change the rules. You could say, oh, no, I'm not going to do it every 10 minutes, I'm going to do it every 5 minutes. But the problem with something like a crypto asset is that everybody else has to agree with your decision. And if they say, no, I'm not doing that, then that's it. It's not going to happen. And so this distributed nature and open source nature of these digital assets means that they are very highly protected and very resilient against these sort of fluctuations, and certainly against physical changes. So I would say, yeah, it's more resistant than other investments. So
I'd say that on the digital side of things, COVID hasn't really affected things that much at all, you know. But when you look at the human side, there's some really good changes where I've noticed that every company has their support teams working from home now. So when you phone people up, you phone someone up and they'll help you, and they say, oh, hang on a moment, I've just got to check my toddler. And you know, we're very dependent on those systems now. And so a lot of the Bitcoin companies like Charles, like anything that's online now, there has been a lot of change behind the scenes simply to keep things running. Gary mentioned before that there's a lot of work in the crypto space on seeking agreement, getting people to agree to something, and a lot of that work is done in meetups and conferences, and all of those have stopped. There is no conference industry anymore. So sure, everyone is on Zoom and GoToMeeting and all the rest, but that I think has slowed things down. I think also because people have got other concerns, the level of anxiety people have for their friends and families has gone up. So some of the deadlines we see that they've slipped. This is the same in the games industry, crypto, all software development. You can see that the people aren't promising, you know, the Samsung Fold 2 at a particular date. People are having to be a bit more flexible. So I think that's been the biggest change, to be honest, you know, the human factors.
You mentioned there the human element and the aspect of the industry, and to a newcomer coming into this that hasn't potentially investigated the market, they would see this as relatively faceless, because whereas with shards, you would come in, you deal with someone behind the counter, you get that human communication. With it being decentralized and all digital, you don't really get that face-to-face interaction. And, you know, it reflects in how the industry responds, because, you know, when you look at the Bitcoin farms that recently temporarily shut down in China due to Corona, and then we look at Switzerland when the refineries there kind of scaled down production, the implications on the wider precious metal market for those refineries was massive. So what did you guys face in that kind of term for the cryptocurrency market?
So I think you're right. I think because the people-to-people interactions are much smaller now, there aren't really any conferences or meetups, which if you're a newcomer, that's a really good way of finding out what's going on and talking to people. That is stopped now, so you've only got online. So that is different. But I would think for the underlying plumbing, because that technology right from the start was decentralized, which means you've got computers all over the planet running programs and built to be quite fault tolerant. COVID hasn't really affected the underlying platforms that much, but everyone has been reworking their operations. Every company, like you know this from what you've been doing at Chance, every company has had to move its support staff back home. They've really changed how they've organized how they do things. There's no travel, so there's no marketing visits or anything like that. So I would say the underlying technology, the platforms, the actual running of things hasn't changed that much, to be honest. Yeah.
Oh, brilliant. And you know, that's kind of the effect that you want to see when you look and turn into a safe haven asset. You want that reassurance that you're not going to see that wild volatility, and you want the confidence in it. And I think that's something that's interesting, because as I mentioned, the supply for physical gold was really under stress in late March. And during the same period, you look at gold-backed tokens like Paxos Gold or Tether, and the price actually went up for those despite the difficulty sourcing those. And, you know, when you see them scaling back production, as I've mentioned, and you see PPE taking priority on flights and freights, you know, rightly so. For newcomers again, how do they know during those times that the tokens are backed by the physical gold, especially when during the same period you look at large ETF funds like the SDPR and the kind of troubles they've had with London HSBC, and we'll say indiscrepancies in how much gold was sourced and how much was actually there for the ETFs?
I'll take this one, Gary.
Yes.
So for last year, I've been working with the Isle of Man government, and a lot of the issues that the regulators have are exactly this point. How do you know that an asset-backed token, whether it's gold or silver, palladium, Bitcoin, whatever it is, how do you know that the asset is really there? And that is, I actually think for asset-backed tokens and ETFs, that's more important than the underlying technology. And the only way you can look is to have a look at the custodianship agreements, and are they doing regular audits, and are they transparent about, say with gold, it would be, you know, can you see the bar numbers, and are they unallocated? And so the terminology is different in the crypto space, but the underlying ideas are the same. So say it's Bitcoin. you know, can you see the Bitcoin at an address which is well known and the Bitcoin isn't moving, and there's a legal entity that's owning that Bitcoin, which ideally is separate from the operations of the organization? That's the gold standard. So all those questions, the organization, whoever it is, they should have those answers 100%, because they're not running a gold standard operation if they don't have those answers. And there's no reason why they shouldn't have those in the public domain. There might be some reasons why they for operational security don't say exactly who has the control over, you know, the keys and things like that, just for operational security. But for every other question, it should be in the public domain. And if you go on their support line and say, oh, can you explain who exactly has the ability to spend that Bitcoin, they should just answer it from a question and answer sheet, you know. So those are the biggest questions. With all financial organizations, it's about trust. And that actually comes back to your point about if you can't meet people, how can you trust them? And that is a legitimate concern. And any genuine company is going to address those concerns with all the possible ways they could think of. So also there's some quite interesting work in the UK about the legal standing of tokens. There's been a task force which has had HMRC, Treasury and the Financial Conduct Authority, the FCA, and they've done some really good work over the last couple of years in, they call it a taxonomy, but basically it's just the rules of how things should be set up and what laws apply. So that it's a policy document, so it's not law, but pretty much everybody is following those rules in the UK. And any organization you deal with in the UK, they should be either following those rules or something very similar.
Just an extra part into this, which is I quite like the Ethereum crypto space, because it enables certain things called stable coins to be introduced, which offer a lot of the benefits that you'd get from something like an ETF, because they are somewhat self-auditing. The way that the system actually creates itself is through collateralized debt positions and things like that. I won't go into all of the mechanics of it, but it's a very interesting system in that anyone can see that the items that are backing the token genuinely exist and genuinely have a value which can be readily accessed and readily traded. So there are tremendous innovations that are taking place in the crypto asset space, which are not really being reflected in the traditional financial spaces. So you get the, in a sense, more reassurance because you have the backing of solid mathematics behind what it is that's going on, that are delivered in an open source, transparent manner.
Oh, I just realized we've been using a little bit of jargon there. When we talk about tokens, token is a digital asset. So it's a Bitcoin is a token. Think of it as anything that you have that's digital that has value and that you can trade with. That's roughly what a token is.
Yeah. So one token could potentially be traded for so many dollars, for example, and it would have that level of purchasing power independent of actually having to be transferred to a dollar. So if you've got one Bitcoin, at the time of this interview being recorded, that's approximately $9,000 worth of purchasing power. So, yeah, that's one way to think of it.
Fantastic. And I'm quite glad you mentioned stable coins there and the different innovations of the industry, because, you know, I've been watching kind of debates with Peter Schiff, who's, of course, a massive advocate for gold. And, you know, they were kind of tossing up the differences between gold and cryptocurrencies. And something that they kept coming back to, and it wasn't an argument I was completely convinced by, although I did see the merits. So obviously, you've just mentioned their stable coins, and we've got innovations like Facebook Libra, we've got Load, we've got Digix Gold tokens. And, you know, as you've addressed, they kind of deal with the security aspect of it and a lot of transparency in the business as well. But there's been a lot of interviews I've looked at where people kind of bring up the debate where you've got a cryptocurrency market that's around a decade old. Then you've got precious metals. You can trace their lineage of wealth retention thousands of years back. And whilst I understand, I wasn't completely convinced by the argument, mainly because of the innovations in it. And when you look at these tokens and gold-backed coins, like we've just mentioned, there are similarities between that and the evolution of fiat money and physical currencies. And what I find interesting is when people ask, is cryptocurrency just reinventing the wheel, or is it seeing the steps that fiat money took with gold and other precious metals, and is it advancing that for a more modern, streamlined era?
Oh, well, so that's go on, Gary. You have it.
Yeah. So that's a very interesting question, because it's a bit like saying, by inventing a computer, are you just reinventing, sort of the abacus? And I don't want to compare gold to being an abacus, because gold serves a very important sort of purpose in our world and has done for thousands of years. And so it's more a case of what something like a cryptocurrency enables in terms of new and exciting, innovative financial instruments that can actually be used to make people's lives better. So it's not all about greedy capitalism. It's about being able to provide a place where you can have a savings account which will earn you 5% interest. And right now it's kind of like, it's very difficult in the Western world with our negative interest rates and things that are going on all over the place to actually find investments that earn interest. And so prudent savers don't have those tools. And so what else can you turn to? Well, maybe your risk profile doesn't suit going to the stock market. And so you turn to something like gold, you turn to something like crypto, and the cryptocurrencies have a history of being highly volatile, but they also enable instruments which are very stable, like I was saying before. But you can tune those so that those stable coins are able to start turning interest. So you get companies like Compound, for example, that are able to offer 7% interest rates. Now, that's a very interesting thing. Obviously, you've got to look at these things and assess whether or not they fit your risk profile. If you're happy to do with them, so at the level of regulation that you're content with. Like I say, this isn't financial advice, but it offers options, and these are things that are new. So we're not necessarily reinventing the wheel, but I think we're adding gears and motors to it.
There's another aspect that I like to about cryptos, that there's inherently global. There are no yet national cryptos. So a Bitcoin in the UK is the same as a Bitcoin in the US. It's the same. They're fungible. It's the same, And so that it shares that characteristic with gold. Gold is global. It's universal, But the big advantage of digital currencies is you can ship them around the planet like at the speed of light, almost literally. They can go down a fiber optic cable, and so that's a great way of like the remittance markets, which is you tend to have remittance corridors. You have people who are working in Dubai, thousands of people who work in Dubai, and they remit back to Bangladesh or somewhere like that. So those corridors are often across nations, across different banking platforms, and they tend to be quite expensive. For low amounts of money, they're pretty expensive. So remittance markets are quite interesting because you have someone at the front end where you hand over your money, an agent effectively. Then you have the back end where you actually do the transfer, and then typically another agent at the other end. It's called the last mile problem. So typically you've got a human at the front and the back, but blockchains and different crypto systems are really good in the middle because they're not national systems. You don't have as many steps to go through, and so you don't lose quite as much. So I would think remittance systems are going to be one of the areas that people are going to roll out. They're going to roll out systems, and people won't even know that they're crypto systems. There'll be a token that's used for the double entry bookkeeping, and that'll be hidden away. And so it'll just seem like you're sending your pounds to your sister in wherever it is, Cape Town, and she gets them as rand, and you don't know that there's a crypto system in between. Because what do people care about with those systems? They care about how much does it cost and how quick is it. Blockchain systems generally, crypto systems generally, have quite good characteristics in those areas. So that's a separate set of functionality compared to a store of value. No one would propose sending little gram bars of gold in the post to your sister in Cape Town. You wouldn't do that, you know. I mean, you could, but you just wouldn't, you know.
No, and it's that functionality and the widespread application in future markets and businesses that's where I see the real interest in Bitcoin. I find it fantastic. The potential is exciting.
Yeah.
And you know, when you look at that when you compare it to gold, you know, of course, that is already, we'll say at that point. And you know, it's got the recognized value. Everyone transacts in it. It's got that kind of trust behind it. But when you mention, as you just say, kind of shipping gold in large quantities to specific people, it's completely impractical. So when you have these businesses that need to transact in such amounts, and you know that they're operating in high-risk climates such as today, where do they get that kind of legitimacy and trust and confidence in crypto if they need to deal in these incredibly large sums?
Yeah, so that's a genuine question, and anyone who's dealing with large amounts of money, or even your savings, you want good answers to that. And that is an area I would say that so Charles has been around since the 60s, I think.
Yeah.
So that's what, now 70 years of history. Nowhere in the crypto space is there anything like that, and because Bitcoin has only been around 10 years, and there's lots of companies that are relatively new. They're startups. Maybe the oldest companies are maybe 5 years old. If you've got a 5-year history in the Bitcoin industry, you're one of the you're one of the early adopters, you know, and there are a few of those around. So how do companies market their trust? They use the same techniques all financial organizations do. Like, they make it clear who the important controlling officers are. So that's like a legal term where someone will be responsible for the custodianship of the primary asset. So that might be gold, that might be palladium, it might be silver. So you have to have someone who is identified in the company structure to say, yeah, it's Bill Jones, he looks after that. You know, Sonia Williams, she looks after the compliance. And if they get it wrong, often they're personally liable for the problems. So they're strongly motivated to sort things out. And those legal frameworks, they are different between crypto and the financial framework, mainly because the laws haven't caught up. But if you're a company that's trying to sell a product in the crypto space or a financial product in the normal space, you've got to make sure it's regulated properly, that you do all of your risk analysis. So for instance, with crypto assets, you need to make sure that your computer systems are hardened. You have to make sure that you can't just walk in off the street and start playing around with the machines where the assets are. So Gary has done some work on hardware modules. You get these little they're called hardware wallets. You get these little plug-in devices where you can store the most important part of your Bitcoin information. It's called private keys, but we won't go into the jargon. But basically, you can buy these little second factor authorization devices. And so Gary in Multibit, he worked on the library, and he still does. I saw him fiddling around with it the other day. The library that talks between them, that's the little hardware wallet and your desktop computer. So that's a very good technique to improve the security. And if you're a company that's offering a solution, you should use the best technology and methodologies that there are around to try and protect your customers' assets. You know, go on, Gary. You look like you've got something to say there.
Oh, just to make a comment about the hardware, because of the nature of the minds who are working in the crypto space, there's a lot of engineering and research that has gone on to make it so that you can create crypto systems which are very secure, and the point of them is to make them secure in the sense that you can have a cryptographer take a look at these and try and pick them apart, and then for them to say, yes, I can certify that this is a secure system if used correctly. Where ordinary people in the street can interface with that is through, as Jim is explaining, the hardware modules. But if you're an institution, or if you're someone who's like an accredited investor, and you've got a very large amount of money that you want to invest, you want to make sure that the hardware and the infrastructure that the company that you're investing with and trusting to do all of this has gone through the various processes like SOC 1, SOC 2, everything else. So hardware modules will provide that kind of protection, but you can also do this in software through very clever mathematics as well. So there's been a lot of research which has gone into making it so that crypto systems are very secure, and I would probably venture to say that they are probably more secure than a lot of the interfaces that you have between yourself and your bank.
Obviously, we've been talking about the application of gold, and I think that is kind of where a lot of its widespread kind of acknowledgement of its value comes from, because, you know, it's used across loads of industries, and, you know, it's finite. Everyone knows why it retains its wealth. But when you look at crypto, it's almost as if it's, I don't want to say speculation, but I'm sure you can appreciate what I'm going for there, because you've got to see the future applications of it and kind of what it's done already, where it's going, and the innovations that we've been talking about. And when you look at what Russia's been doing for it, and then you look at how heavily they've been investigating its application, then you look at China creating its own cryptocurrency more recently, it's like the adoption requires the technology of the coins to become a more stable commodity, much like fiat, with a more kind of manageable price fluctuation. I mean, do you see that becoming more widespread, widely applied within future years into a kind of already established monetary system? I.e., do you see crypto potentially replacing fiat in upcoming years?
Oh, so where they cross over, I think that so in the future, people won't even know that they're using a crypto system. I think people will transact and it'll work really well and it'll be cheap and everyone will be happy. And behind the scenes, there'll be a lot of crypto engineering that people won't know. You know. But to answer your question about the touch point with sovereign systems, so there is this concept of, they're called central bank digital currencies, CBDCs. So that sounds jargon, but basically it's if you walk past the Bank of England in London, you can almost hear the money printer go burr. You know, you can almost hear the sound of it. And so all central banks have had research teams in the last couple of years looking at some sort of crypto system, some sort of digitally signed equivalent to sterling or USD or Singapore dollars. All of them have, and they're quite open about that. They're in the research teams, you know, and they've got clever guys, it's mainly guys to be honest, working on those. So they're working on those, and maybe they'll roll them out, maybe they won't, but they're certainly evaluating them. And personally, I think that they'll start getting used when, sorry, there is a little bit more jargon here. Let me get the book, hang on. I'm reading this book at the moment. This isn't a plug. I've got nothing to do with the author. That's the right way up, isn't it? You know. So this is the Deficit Myth by Stephanie Kelton. I don't know her, but she's one of the leading proponents of MMT. It's called Modern Monetary Theory, and it's this idea that we could go past what people have been doing in the past, which is the sort of Keynesian model of how things are done. And if you've ever heard of helicopter money or it's money for a social policy. Money is a tool for social policy. There's a whole load of ideas about that. So people are trying to kind of reimagine monetary systems. And a lot of that is because the current monetary system, as probably everyone listening on this call knows, it's kind of a little bit broken. I think even the people behind the curtain will think that, you know. And so people are looking for improvements. And crypto systems are one of the engineering solutions that can help people make those systems. For instance, everything in Bitcoin is all digitally signed. So you can you can be sure that the message doesn't get corrupted when it's transferred. So that's, if you're designing a system, you want that. There's no reason not to use it. So I think to answer your question, you were talking about governmental systems, which in the Western world are central bank and Federal Reserve systems. All of those organizations are looking at crypto systems, and maybe they'll roll them out, maybe they won't, but they're certainly exploring that area, and it gives policymakers more tools to make more effective transfer payments or something like that, So all that work has been going on. It's been going on for at least a couple of years. So Gary, did you want to jump in there?
Yeah, I was just thinking that the open source cryptocurrencies provide a certain level of threat to governments as well, because if we look at something like Facebook Libra, then that has the potential, if it is finally realized, to be a worldwide currency that could, sort of introduce a potential threat against something like the US dollar, the British pound, sort of the euro, because although at the moment it is pegged against a basket of those currencies, if everybody starts using Libra instead of dollars and pounds and euros, then that could easily flip things around. So suddenly the US dollar and the GBP take their value from Libra and the purchasing power of Libra within the worldwide economy. So governments, and certainly Treasury departments are very clever people, and they have seen this coming from a long, long way off, and they're taking steps to mitigate it. I think maybe we haven't seen so much or heard so much about this because up until now it's been, as Jim says, a research project, but they've definitely got their eye on it, because as crypto is maturing, and it's maturing fast, I think they're starting to wake up to the fact that this is a real threat. And it's a case of how they respond to it. And I think that using the crypto technologies in their own digital currencies solves a big problem for them. And so they're going to go down that road. And good luck to them. I think it's a good thing to do. We need regulated and well-managed currencies in the world.
Well, I think it's an interesting point you brought up there, because I think Libra would perhaps be the best example of this. When governments are trying to predict a future for these digital currencies, and perhaps to China now, when they're trying to put their own ideas on there and kind of utilize them in a way that will benefit that country specifically, when we're seeing those applied, it kind of takes away, I mean, particularly for the kind of crypto purists, away from that kind of lack of anonymity, and it kind of undoes what makes crypto for some fundamentally crypto. I mean, where do you see the repercussions of that going for the wider market?
I think that's a valid point, and that there are different sorts of crypto systems now. So what you're talking about there about the pseudonymity and anonymity, those systems. So Bitcoin is a pseudonymous system. You don't have to log on using your name and address and all the rest, and those systems don't really fit in to the regulatory system that we have in the UK or in Europe or the US, So that's probably one of the reasons why it was first created, to be honest, And so the darker crypto systems, the less transparent ones, it's quite difficult to integrate them with the modern existing legal framework. Which, I mean, that's one of the reasons why people enjoy gold, because of the privacy that offers you. And so I think you probably will have different sorts of crypto systems that are meeting different sorts of needs, and some of them will be like Facebook Libra is going to be data mined and all those transactions. Facebook is going to know, who originated it, where it went to, what's the value being transferred, what's the what advertisement can I sell someone for making that transaction? And everybody knows that's going to happen, really. So that is data mined in its entirety, but there'll still be different crypto systems that are darker and more anonymous. I don't see them going away. There's going to be a variety of systems, So Gary, what you wanted to jump in there?
Yeah, I was just thinking that one of the things that with Facebook is that with the advent of digital money, what you get is contextualized money as well. So because if you have total visibility over all the transactions that are going on in your environment, you can monitor them in real time, because that level of digital information is trivial these days. So Facebook, for example, and we shouldn't really be singling them out because there are many other companies that are doing this, would be in a position, as Jim says, to be able to say, oh, you're making a transaction between Alice and Bob, and you happen to be sitting in the local DIY store, and you've just purchased these drills. Oh, it looks like you're going to need some more. It's like house renovation equipment as well. I'll just make sure that for the next couple of days, I'll send you some house renovation and local builders merchant advertising. Now, that could be seen as a good thing because, oh, my life is becoming easier. I don't have to go and seek out a local tradesperson. But then there's a sinister side to it, which is that those transactions will be held forever. And that transaction will be held forever. And if for some reason the idea of renovating your own home suddenly becomes socially unacceptable, you're not going to be able to hide that fact. It's going to be there forever. And this is the problem. We may have attempted the right to be forgotten and things like that within the EU, but these big data companies, they like more data. As Jim says, there are privacy enhanced alternatives, and people will be able to find those and use them if they need to. But they, in terms of the mainstream, it's certainly going to be governments and very large organizations who will be putting forward their products and trying to convince people to use them over something else. So we're going to be looking at Apple Pay and Google Pay and things like that becoming much more crypto and digitally oriented.
No, I think it's that kind of rich, diverse nature of the market that is allowing a lot more people to not only find and discover crypto, but of course get involved in it to a much fuller extent. And I think with that, I think we mentioned before that a lot of the people, or it could have been our preliminary call, a lot of the people in crypto seem to be of a younger demographic. But when you look at the precious metal markets, and of course we're generalizing here, it doesn't apply to everyone. It tends to be at the other end of the scale. And when you look at the ways that you can kind of store crypto, point where you're concerned about human error and being able to retain these and lose it, and when you've got perhaps a less safe method of storage, because when you can go to you buy physical gold, you can leave that with a dealership or a recognized third party. I mean, do you think that negates the accessibility, kind of that human error and an ability to sound over dramatic, but wipe your savings if you lose them, because then they'll avoid essentially?
Yeah, I would, if I may, Jim, I would say that it's like with anything, the precautions that you take should be commensurate with the value that you're trying to protect. So if as an individual you don't feel comfortable handling something as tricky as cryptocurrency, but you still want to be exposed to the potential upside of holding it, then get somebody to look after it for you. Have a custodial company. There are actual regulated financial institutions in the EU who are able to provide custodial services. Now, yeah, they're going to charge a fee. You may find that fee is too high, or maybe you're comfortable with it, depending on the amount. But it is possible to do that, and then so you have the necessary exposure that you want without necessarily the custodial risk of losing it. But then equally, you may feel that you're comfortable with that. And so, as Jim described earlier, there's these little hardware devices, and I would certainly recommend that those hardware devices are the things that you should use. The use of hardware tokens and hardware wallets would be the home solution, right, for people to use. I would not recommend that people try to do anything more sophisticated than that, or try to avoid using hardware wallets. It's absolutely crucial that your private key material, a bit of jargon again, but it's the keys to the safe, the digital safe, and their digital keys should definitely be preserved in a way that is similar to the way that you would look after your passport. You do not want that information to be leaking or to be lost in any way. And there goes my little guy.
Yeah.
So there we go.
And then when you get to the corporate level, you can have multiple signatures that you need to transact. So in banks, they call it 4 eyes. So typically you would have 2 people that sign something off, and you can do that the same with Bitcoin and most other cryptocurrencies. So obviously it's more complicated. It's like all security. All security is a bit of a hassle. And if you're dealing with 100 quid, well, you just put it on your phone and you don't worry about it because your phone's worth 1,000 quid anyhow. You know, if you've got tens of millions of dollars, then you probably need to have a formal trust with a company dealing with that, and you know, known directors, or there are different vaulting solutions that you can use. So the crypto market now is sufficiently mature that companies have specialized in looking after Bitcoin for other companies. So they're like vaulting solutions, they're called. So it's very similar to what you have in the gold space. Some companies will deal with transactions of gold. Some people are going to deal with vaulting it. You know, if you've got access to the vault that's under the Zurich airport, great, you can rent that out. So you're going to have a whole load of solutions, and what you use is going to depend on how much money that you have. But for like 100 euros or 100 quid, you can have a wallet on your phone with some. You can recover wallets using wallet words, they're called. You know, we won't go into the mechanics of how you do it, but there are ways and means at every level, up to certainly tens of millions. I don't know if there are hundreds of millions solutions yet. I don't know. You know, but to answer your original question, there are some risks, and the risks are different. The main risks are to do with what Gary talks about of maintaining the private keys. That's the secret that gives you access to your account, your Bitcoin. That's very similar to if you use a bank solution. You've got to be super careful about the password, and business accounts give you a little 2-factor dongle. The hardware wallets are the equivalent of that. So there are good solutions now at pretty much every level, but you do need to understand them and learn about them and practice your recovery systems and things like that. It's money after all. If you don't look after money, it gets lost, doesn't it? I mean, that's the general rule, you know.
No, of course, and you know that's something that you, as you say, you need to take on board when you're considering these things, because you know it's about mitigated risk with anything. But I mean, it's something I've heard with any kind of investment, and you know, it's essentially just an added layer of security, and that's what you kind of need. You need that security and kind of confidence to go into that market, and I think that's been kind of the tone that I've got from a lot of people who are investigating crypto and new to this kind of world. But just to kind of wrap things up, where do you guys see the cryptocurrency market being in 5 years?
Yeah, apologies for my little guy going in and out at the back there. So, and hopefully there's no background noise.
That's actually a really good point. Yeah. So the children of today are going to be the adults of tomorrow, and they're the digital natives. You put them in front of a touchpad, and they'll be busying away from when they're 2 years old, 3 years old. And so the digital systems of all sorts, streaming, messaging, those are going to be the dominant systems going forward. And so crypto systems will just fold into that. Like there's lots of games that have money. There's actually an Ethereum standard for in-game swords and assets. So it won't be very long before you can take your hard fought for sword and shield in one game, take it out of that game and put it in another game. And there are already standards and companies that I know that are working on that. So all these capabilities that at the moment it sounds a little bit science fiction, they'll become so normalized that people won't even think about it. Like we're on a 3-way video conference here, we don't give it a second thought. And if I want to transfer some crypto to Gary, I just get my phone, bit bop, and it's done. And all of that will be normalized. People won't even know that they're using these crypto systems, I don't think, you know.
You know what you were talking about with the swords in virtual games. I mean, these are digital items that have value. People have had to expend a lot of work and time and effort to be able to get those items allocated to them. And so what you find is that if you wanted to, that you think of them as almost like electronic baseball cards. You know, if you have a particularly rare baseball card, that's worth a lot of money to those particular collectors, and that would be considered non-fungible. Consequently, you have something that is very similar in the Ethereum space. It's enabled in the Ethereum space, a non-fungible asset, and as Jim was saying, you have the associated protocol for that non-fungible asset. Talking about the non-fungible side of things, it allows you to be able to open up entire new markets that didn't exist before, because that class of asset wasn't available to anybody. I mean, it would be impossible to digitally replicate a baseball card and be able to create a market for that digitally, but it can be done now within the crypto space. And so now you can have all of this trading of these non-fungible assets, and anything that is non-fungible, anything that is a collectible, and you can create collectibles. I mean, there's a concept called crypto kitties, which is just sort of like blending different crypto assets together to create new ones with a certain amount of pedigree, a certain amount of lineage, which is considered to be valuable. If your particular crypto asset stems from this particular crypto asset, it's more valuable than if it didn't, because certain collectors want that. And then you have this whole concept of chain of provenance. And so you're able to trace back the lineage of that, of that asset as far back as you want it to go, because that forms part of what makes its value. You could very easily expand that so that now you've got provenance chains for the diamond industry, for the gold industry, for trade finance. And suddenly all of these different markets are now opened up to you and are made much more simple, because a lot of the third-party middleman work is being taken over by automated contracts. And so it becomes a much more streamlined process. And that enables global trade. It enables people to be able to investigate new markets. And so there we are. There is a very bright future for cryptos.
And the other side, which we've touched on a little bit, talking about Facebook Libra, is we're going to have almost certainly corporate script, corporate tokens, corporate money. It might be introduced as, oh, say your BA points. Everyone, if you're a frequent flyer, you love your points, your travel miles. Those may very well appear as crypto systems, and people won't really be aware. You'll download an app and log in, and you'll have a certain amount of money or miles or whatever it is. Every time you go to Sainsbury's, you get your points. All those systems, all those accountancy systems that we have all over the world, blockchain systems, Bitcoin and other comparable systems are great for that, because that's really what they are. They're sort of online ledgers, online account books that everybody is verifying all of the time, and people will use them for all sorts.
Yeah. Oh, just an interesting point there. Back in the early days of finance, people had single entry bookkeeping, and then I think it was in Venice, that they invented the concept of double entry bookkeeping, so that they could reduce the level of fraud that was taking place among distributed companies. Blockchains introduced the concept of triple entry bookkeeping, and this is something that is somewhat innovative. It allows for the trustless element of value exchange, and so what you can build on that is limited pretty much only by your imagination.
So we use a little bit of jargon in there without explaining it. So a blockchain is the underlying data structure that things like Bitcoin use. So it's the form of database that they use. So it's a decentralized database, effectively.
Yeah, you don't need to understand how a blockchain works or how any of the crypto systems actually work in order to be able to use them. And after a while, it's a case of there is a certain leap of the imagination to be able to say, is this going to form the future? And is it going to be a future which is going to increase the world's value? I personally think it is. And yeah, so that's why I'm in the business.
No, and of course, it's those applications that, as I said before, I think makes it so exciting that we're on the cusp of those, seeing those rolled out across so many industries. And, you know, give it a few years, who knows where we'll be. It's fascinating. But thank you so much for taking the time to speak to us today. Thank you for your
Great, thanks for the call, Adam.
extended patience with dealing with our internet provider.
Not at all.
Really appreciate that.
A pleasure. But I should say that if anybody does want to know anything more about this, our contact details will be sort of like associated with the program notes. So I'm working with attestant.io, and Jim's with jaderesearch.org. So just look us up on the internet and drop us a line. It's not a problem. We can help.
If you enjoyed this video, be sure to subscribe to the Chards channel and stay up to date with our releases by hitting the notification bell or by following our Facebook, Instagram and Twitter pages.